counseling service. Lance, can you see me if I move up here? Everybody shifted to this side, so that would be very lonely if I was talking to you over there. As I said, I'm Richard with Consumer Credit Counseling Service. I brought goodies today. Did everybody get a packet? That packet is yours. It's a copy of everything we're going to do today. So if you're like, oh, well, what did he say? It's in there. Okay, so go ahead and write your name on it. That's yours to keep. Did everybody get a pen? Y'all can't say I didn't give you anything. You got a free pen just for showing up, right? Pretty good deal. All right. So today we're talking about increasing our credit scores. Everybody here for that? Good, one person. That's great. I'll take it. Okay, here we go. So our agenda for today are the steps for healthy credit. We all want to have healthy credit. And how do we get started with it? Well, we take a workshop. So we can check that off our list. We've already, all just by showing up today, done step one. Step two, and I'm going to give you a little bit of homework assignment. Y'all are good students, so you're used to that. But I am going to ask you to pull your credit reports after the workshop. I'm going to show you how. We'll make sure you're not signing up for anything or getting on some scam site or putting in a debit or credit card information when you don't need to. We're going to practice. I'm going to walk you through reviewing your credit reports so you'll know exactly what to look for when you pull them. And then we're going to go through, y'all, 1 out of 4 of us have errors on our credit reports. So I don't want you to freak out. If you pull your reports and you've got mistakes on there, I'm going to give you some tools and walk you through exactly what to do if you're one of those folks. And then finally, we're going to spend the bulk of the time talking about improving our credit scores. Raise your hand if this looks like a pretty good agenda. Does this seem like a good use of our time in the next 40 minutes or so? Perfect. All right, so let's dive in. I need 2 volunteers for our first exercise. I'll show you in a second if you volunteer. Thank you. I got 2 volunteers. I love this crowd already. All right. So y'all can stay where you are, but stand up for me if you would. And both of these ladies, let's give them a round of applause. Very brave. They just volunteered. They have no idea what to do. So these are both very good students. But just for this illustrative purpose, I need for one of y'all to volunteer to be a bad student. Just for this. Okay. Y'all should have seen her friends, how fast they were happy to volunteer. Okay, so both of these ladies are buying a car, let's say a year from now. They're each buying their own car. It's going to be a $25,000 car. They're working students, so they don't have any money to put down. But they're going to get a $25,000 car each, and they're going to get a 60-month loan. So they're going to repay the $25,000 over 5 years. Is everybody with me so far? Everybody understand? Okay, so we're going to start with our bad student. She's not taking notes in the class today. She's texting her friends. Her mind is somewhere else. She never pulls her credit reports. Y'all, she's got all kinds of errors on there, has no idea that they're on there. She just sees her friend. She doesn't do any of the steps we talk about improving her credit score. So a year from now, she sees her friend in the parking lot and goes, ooh, I like that car. I'm going to go buy it. So let's check out her situation when it comes to her credit. Her credit score is 550. Is the car dealer going to approve her for that loan? No. She's probably going to have to go to a buy here, pay here place, which are usually not good deals for us as a buyer. Look how bad a deal it is. It's an APR, or interest rate. Look at this, y'all, 17.6%. That's like an average credit card, but it's not a good car loan. That's a high interest rate. But let's look at what's costing her every month. $659 is her payment. And over the life of this 5 years, we know she's going to pay back the $25,000, right? That's just the principle. But we always know that borrowed money costs us. Look how much it costs her. She's paying $12,734 just in interest on top of the $25,000. So we're really looking at about $38,000 for her $25,000 car. Everybody understand our bad student situation? All right. So let's look at our good student. She's taking notes in the class today. She immediately leaves the class and pulls all 3 of her credit reports. She finds errors on there and she gets them cleared up. She does the things we talk about building and rebuilding her credit. And look at her situation. Goes to buy the same exact car. Her credit score is 200 points higher. So she's at 750. Is she going to get approved from the car dealer? Not only that, she's going to be able to shop. She's going to talk to her bank and see what kind of interest rate they're going to get her. She's going to talk to her credit union. She's going to get the best rate she can. And that rate's going to be 5%. Might even be able to do better than that, but the math's already done for her, so we're going to go with 5%. Look at her monthly payment though, $473 a month. That's about a $150 difference. Y'all would feel that, right? And I would feel $150 a month is significant. And then look at the life of the loan. It's not only going to cost her $25,000, she's only paying about $3,300 back, so she's paying about $28,000 for her car. So our good student ends up saving herself about $9,400, or a bad student ends up costing herself about $9,400. So is credit important? You bet. Let's give these two ladies a round of applause. We appreciate y'all volunteering. Hopefully that wasn't too painful. But not only does credit cost us more money or save us more money, our bad student's going to pay more for car insurance. She's going to have a harder time renting a place. She's going to have a hard time buying a house. She's going to get hit with a lot of other costs that are hidden as well. So let's dive into our agenda with a question. Where should I go to be getting my credit reports for free? Should I be going to get all three? Should I be going to A, creditkarma.com? Should I be going to B, Annualcreditreport.com, C, freecreditreport.com, or D, creditreport.com? Raise your hand if you, let's all be brave. I just want you to guess. How many people think it's A, creditkarma.com? Okay, if I did a survey of how many people have that app on their phone, I bet I'd get a lot of hands raised. Okay, so we got a few people saying, thank you. A few people saying A. Anybody say B, Annual Credit Report? All right, anybody say C, free? Got free in the title? I cannot fool this group. How about creditreport.com? So y'all, if you said annualcreditreport.com, that is correct. Has anybody used that site before? Okay, awesome. I love it. All right, so it is the one place by federal law we all have the right to see all three of our credit reports every 12 months for free. Now, during the pandemic, they're letting us pull it every week now, which is overkill. You do not need to be monitoring your credit every week, every day, but you do need to check in with it at least once a year. Okay? So annualcreditreport.com, you go in, you enter your information. I took a screenshot of it because I don't know about you guys, but when I Google stuff now, like the first two things are ads, and then I got a bunch of scams, and then I'm actually on the site I'm looking for. So the site should look like this. At no point should it ask you to enter debit or credit card information. So what you're going to do is go to the red button that says request your free credit reports, click on either one of those, and then you're going to enter your personal information. Welcome, y'all. If you're just joining us, grab a seat anywhere you like. So we're talking about how to get our credit reports from Annualcreditreport.com. So what it's going to do after I enter my personal information, how many people have moved in the last 2 years? Anybody moved in the last? Okay. So what y'all are going to have to do is enter your current address and your previous address. Everybody else, no move, you just enter your current address and then click submit. It's going to ask you which credit reports you want to pull. There are 3 major credit reporting agencies. Somebody raise their hand and tell me one of the credit reporting agencies they've heard of or familiar with. Yes, sir. Equifax out of Atlanta. Good. Anybody got another one? Raise your hand and give me a second. Yes, ma'am. TransUnion. Anybody want to give me the third? Experience. Good. So those are the 3 credit reporting agencies. Now, which one do I want you to pull? Oh, well, this group, all 3. That is correct, y'all, because they do not talk to each other. So you might have an account that only shows up on one of the 3. And if you don't pull that one, you're not going to see it. So we want you to pull all 3 to get your full credit picture. Now, what Annual Credit Report does is link you one by one to Equifax, Experian, and TransUnion, and then it takes you back to them. If you get one of the security questions wrong that they ask for, it's going to say, you can't pull your report. If that happens to you, don't give up. Just call the 1-800 number. It takes about 2 weeks, and they'll mail you any of the ones you were not able to do. If you're not able to get it that way, they will give you a mail-in request form. I just like instant gratification. It takes 2 weeks to get it out and get it back. If you do mail it in, send it certified mail so you have proof when they got it, because then they have 15 days to get you reports. But I like going to Annual Credit Report, the website, because you get it instantly. Okay, so what I want you to do is, if you got it there, go ahead and save it, and I want you to review your reports. Everybody feel like they can do this? All right, this is your homework assignment, so I hope you feel comfortable with it. You're just going to go and pull all 3 credit reports that you can. Now, once you save it, I want you to review it. Now, I will tell you, each one of the credit reporting agencies looks slightly different. They might use different terms for the different sections. but there are essentially 5 parts to any credit report. No matter what terminology, no matter what order they are in. If anybody's pulled their Equifax, the last 10 pages are all like disclosures. You don't have to go through those. So I want to highlight and just work with you on how to review your reports. So where do we want you to start? The personal information section. This is the easiest section to review because everybody in here can recognize their name and address. But remember in the beginning when I said 1 out of how many people have errors on their credit report? 4. That's a lot of us in this room. That's a high number. Guess where most of the errors are? They're in this personal information section. I had somebody last week. He was a senior. Well, guess what? Junior's name was on his credit report. We don't want that. They had never borrowed money together, so they should not be on each other's credit report. And common misconception, I get married, now all of a sudden everything's merged. Not unless we apply for something together. This one has a Social Security variation. 99% of us should not have a variation of our Social Security number. So we want to catch those errors and get them off our report. I'll show you how in just one second. But most of us, we're going to see this and everything looks good, and so we're going to move on to the next section, which is public records. I don't know what it is about that phrase, but as soon as I put it up, people get real nervous about like unpaid parking tickets. Don't worry, those are not on your credit report. Traditionally, historically, the things that show up on your credit report in public records are bankruptcies, tax liens, and judgments. This one happens to be a judgment. Now, what I will tell you is in the last 3-ish years, we have seen less tax liens and judgments. We typically only see bankruptcies. So if you have a bankruptcy in the last 7 to 10 years, you should check it, make sure it's in the public record section, make sure the dates are right and the status of it, and then you check it and move on. So most of us will not have this. If you don't have it, it will either say no public records on file, or it will either list this section. So then we want to look at our collection accounts. If you're not familiar with the collection process, your account, let's say you have an account, you're not able to make payments on it, and it gets charged off, goes through the collection process with that company, gets charged off, and a third-party collector takes over. So this could be, it can be sold then again to another third-party collector. So you could have the same account listed on your report 3 times and go, oh my gosh, who do I make payment arrangements with? Who do I pay? Whoever has this phrase, recent balance, is who you're going to want to make arrangements with. So in this example, I know the type is small. It says main collection agency. And originally it was a televised cable company. Right, so I'm going to put, any account can go to collections. But there are types of accounts, including apartment complexes, cell phone bills, medical bills, and utilities, which if I'm paying them on time, they don't show up on my credit report. Now all of a sudden I go late with them, they show up on my report, and a collection account on my report is automatically a negative. So what I want to do, if something is in danger of going to collections, is prevent it from going to collections. Because once it goes on there, the damage is done. And we'll talk more about that when we talk about the score. Is everybody with me so far on reviewing the report? So we've got 3 sections down. Let's go to the next one. So negative information typically stays on a report for how long, y'all? How long does negative information stay on our report? Good. It's technically 7.5 years. They give them a 6-month window there from when I first go delinquent. And by the way, a collection account being sold multiple times does not reset that clock. Positive information stays on our account for 10 years. So the good stuff stays on there longer. And so you might see these called accounts in good standing. And our accounts in good standing are things that we're paying on right now or that we paid off and we're never late with. And there are traditionally 2 types of credit accounts. So I'm going to split the room kind of in half. We'll go from you on, you guys are going to be installment loans, and y'all are all going to be revolving accounts. So let me show you the difference in these. So my installment debts work this way. So I come to borrow money. That woke a few people up. I come to borrow money. And I borrow from this group, and y'all give me a lump sum of money, and then I pay you back in monthly installments. So if you tell me it's 3 years at 20% interest, I'm paying you that same payment every month for 3 years at 20% interest. What type of loans work that way? where you pay them back in monthly installments. I'm hearing something, y'all. A little louder. Car payments, absolutely. Would we agree with that? You bet. And the other big ones. Mortgages, good. Student loans, personal loans, these are all installment debts. The opposite of an installment debt is a revolving debt. So I come to borrow money from this group, and you all give me a line of credit. And I can use it, and then if I pay it down, I can use it again. It revolves, it comes back to me. What type of debts come to mind when I say that? Credit cards, right? Department store cards, gas credit cards. So these are revolving debts and installment debts. It'll be important when we talk about the score in a few minutes, the difference in the two. But just keep those in your head, installment and revolving. The last section are credit inquiries. So have y'all heard the expression hard inquiry or soft inquiry? Hard means it lowers your credit score, soft means it doesn't. Credit inquiries stay on the report for 2 years. But what I would say is the credit reporting agencies don't always use the expression hard or soft. They might use something like request viewed by others or request viewed only by you. Now, let me give you a scenario and y'all tell me if you think this is a hard inquiry or a soft inquiry. So give me a department store we can pick on. Victoria's Secret. So I go to Victoria's Secret today, check out, get a bunch of stuff, and what are they going to offer me when I go to check out? Credit card. Apply for it. You don't have to get approved for it. It won't affect your credit. Just do it. We get a discount. Is that a hard inquiry or a soft inquiry? How many people say hard? Raise your hand if you feel like that's a hard. How many people will say soft? It's not going to be. How many people have no idea? Just so like, thank you. Honestly. Okay, good. So if you said hard, believe it or not, you're correct. That is going to lower my credit score, just that inquiry. So we got to be really careful. I love doing it this time of year because we're going into the holiday season, right? And so I want you to be careful. Tell your friends and family and coworkers that that's a hard inquiry. It's going to lower my score. Good. All right. So does everybody feel like they can do that with their own credit report? Just walk through those 5 sections. Let me put them back up there real quick. Everybody feel like they could review that? Good. That's going to be like the second part of your homework time. Once you pull it from Annualcreditreport.com, I want you to review it. Now, we said, before I do that, does anybody get pre-approved offers in the mail? See, heads nodding. Anybody like to stop getting pre-approved offers in the mail? Okay, all right. So, the second best website. The best website on the planet, of course, is Annualcreditreport.com. The second best website is optoutfreescreen.com. So doing your homework and going to Annual Credit Report and reviewing your reports will realistically take you 15 minutes. This will take you 2 minutes. You can do it from here to your next class or from here to grab lunch. Do it on your phone. Optoutfreescreen.com. I go to this site, I put in my information, I click opt out. 30 days later, anybody I don't do business with cannot look at my credit report without my permission. It's good for 5 years by address. So if I move, I have to do it again. But let's say in a few years you buy your dream home and you're not moving anytime, you go online and opt out, and then you mail in a hard copy, it'll opt you out forever. If 6 months later you miss all that junk mail, you can always opt back in. We like this? Good site? Good. Second part of your homework. Annual credit report and review. Second part, opt out. Awesome. All right, so what if we have errors on our report? What if they misspelled our name, got our address wrong, and a bank that I closed and paid off a few years ago still shows with a $300 balance? Well, they make it a lot easier for us to dispute now. We can dispute over the phone, we can dispute online, but the success rates are so much higher if we have a paper trail. So believe it or not, I want you to print out a copy of that report. I want you to write, I want you to circle any errors that you see on that report. So those 3 errors I mentioned, I'm going to take a big red marker and circle those errors. I want to make it really obvious to whoever I'm sending this to make sure they know these are the items I dispute. I'm going to write a letter. We have a sample dispute letter in your packet. You're welcome to use that. It quotes the Fair Credit Reporting Act, shows you exactly what to do. And then you include any supporting documentation that you have. If you don't have supporting documentation, you can still do this dispute. That's not a deal breaker. And then you want to send all that certified mail. It'll cost you a little bit more, but by law, they have 30 days to respond to your dispute. You want to know when they're on the clock. All right? Don't waste your time disputing things that you know are correct, that you just don't like. Don't waste your money paying on a credit repair company. I had a guy last summer that was paying a law firm, I put that in quotes, $120 a month to repair his credit. Anything you can do to improve your credit, you can do yourself for free. If you need some guidance, I gave you our PIN, you can call our number. I'm happy to do a one-on-one session with you at that cost. So don't pay a third party to improve your credit. Now, what I will say about this process is, remember I mentioned the bank example of owing the bank $300 that I closed a few years ago? If that's the case, I'm still going to dispute it with the credit reporting agency, but I'm going to send an extra copy to that bank as well, because what I'm trying to do is connect that bank with the credit reporting agency. All right, I want to pause there and see if there are any questions. So far we've talked about reviewing a credit report, where to pull it, opting out, and disputing errors. Any questions or clarifications y'all need on anything I've said so far? Yeah. So did they open it with your permission or authorization? Yes? Yeah, just a clarification. Not really. So somebody used your information, opened an account, and didn't pay it. Y'all know this situation? You've heard of this? Anybody know what that's called? It's technically called identity theft. So what you would do in that example is that, and that's why I asked the question, did you know about it? Because sometimes you can co-sign. Has anybody heard of co-signing or be an authorized user? If you co-sign, then you're both on the hook and you kind of knew about it. But if somebody did it without your permission, that's identity theft. So you have two steps there. The first thing you have to do is file a police report. You do not have to name that person if you know who it was, a family member. Unfortunately, that's the most common person that does that. The second thing you would do is go to identitytheft.gov and fill out an affidavit, and then you would keep this process in mind and dispute it with each one of the credit reporting agencies and that account. So this part would be the same, you just have two extra steps. Does that answer your question? Thank you for asking. Any other questions before we move on? Yes, ma'am, talk to me.
Could you talk briefly about Cosign?
Yeah, so the question was, could you talk briefly about Cosign? So Cosign works this way. Let's volunteer. Let's say we get an account together. Okay, so we both co-sign on a car loan. That means and maybe our agreement is, I pay it, but I couldn't get the loan without her credit, so we co-sign. Everybody understand that situation? So between us, you're never going to make a payment. I'm going to make the payment. Now all of a sudden, 6 months into the loan, I lose my job. And I cannot pay it. Whose credit is that affecting? Hers? Mine? Both. So we're going to talk in a few minutes about ways to build your credit up. You don't usually recommend co-signing because it puts both people at risk. We'll talk about some other ways to do that, but good question. Any other questions? Yes, sir, please. Say that one more time. I think I heard it. You can add an authorized user to your card, and in some cases that can be a good thing. In some cases it can be a lot like co-signing, right? That other person doesn't, maybe whoever's supposed to make the payment doesn't make it. Now instead of affecting one person, it's affecting two. So we'll give you some other ideas in a second about ways to start with credit from scratch or build the credit as we go. Good, all right. So there's the dispute letter. It's in your packet, so I'm not going to review it. So we've talked all this time and haven't talked about credit scores, so let's talk about it. See, these are some of the great questions we've gotten in the past, and you might be wondering yourself, how many credit scores do I have? Why does a car lender, right, think they're a good student, bad student when they bought their new car? How come the car dealer gave them one score, and when they got car insurance, they got a totally different score? How many versions of FICO are there, and is Credit Karma accurate? What's the deal with Credit Karma? So I want to frame our conversation about credit scoring by starting with the two major credit scoring companies in the United States today. The first is called a Vantage Credit Score. You may have lived your life however old you are and never heard of a Vantage Credit Score. And the reason you may have never heard of it is only 10% of lenders use a Vantage Credit Score. The other 90% use a FICO score. Everybody heard of a FICO score? Okay. That's because most lenders use it, right? So what causes a lot of confusion is the places, how do you get your credit scores these days for free? Nobody's getting a credit score for free? Come on, man. Credit Karma. Credit Karma? Anybody else? Yes, sir. Experience. Yes, some credit cards offer, some banks, some credit unions offer a free score. Some of them you don't even have to be a card holder or a member. Credit Sesame, Credit Wise, these are all free scoring ways you can get free scores. The problem, and what causes a lot of confusion, is Credit Karma, Credit Sesame, Credit Wise typically will use a Vantage credit score. And there is nothing wrong with a Vantage credit score other than only 10% of lenders use it. But the study showed that the Vantage scores can be up to 40 to 80 points either direction off of one of your FICO scores. Now to confuse you even further, there are now 10 versions of FICO. And if a car dealer pulls it, they're going to get a different score than a property management company, than a car insurance company, than if I try to get a mortgage, then I try to get a credit card. These are all different credit scoring models. So we're all sitting here today with over 40 different credit scores. And before you throw your packet down and run out and go, this is confusing, I don't want to hear any more about credit scores, what you do to improve one of your scores will improve all of your scores. So let's talk about what goes into a credit score, but before we do that, I got another question for the group. We'll do this by show of hands, okay? So which of the following will impact your credit score? And let me read it first and then I'll ask for a show of hands. Is it A, available credit? B, your debit card? C, your income? Or D, all the above? So take a second, think about it. We'll do a quick show of hands. Don't be nervous about guessing. We're a small group here. We won't know if you get it right or wrong. All right, how many people think it's A, available credit? How many people think it's B, debit card? How many people think it's C, income? And how many people think it's D, all the above? All right, I love this group, y'all. All right, so D, all the D's I saw you, y'all are good test takers. You know if it's all the above, it's usually the right answer, right? Unfortunately, in this example, and I did not stump everybody, but if you said available credit, that was correct. It is not all the above. Guess what, y'all? They do not capture our debit card information on our credit score. Our income is not factored into our credit score. Now, when we borrow money, they're going to ask it. But the one thing out of here they will is available credit. So y'all give me a bank we can pick on. BB&T. Okay, BB&T, I go this week and apply for a BB&T credit card. And they give me a $300 limit. And I go out this weekend and charge up $299.99. Do I have any available credit? What's that done to my credit score? Drop it. Having available credit will help it. So I feel like you had a question up there. I didn't want to ignore it. Did you have a question or read? That's totally different, so it's a good catch. Debt to income ratio is not factored into our credit score, right? Because they don't have income. They don't calculate it. But you're right, when I go to borrow money, especially a house, they're going to look at how much debt do I have compared to how much money I make. But they don't factor that into that magical little 3-digit number. So you're like one step ahead there when it comes to the credit score. Good thought. All right, so let's go to what do they really look at? So this is public information, y'all. You can Google FICO score and you will see a little graph and it will look just like this. There are 5 different things that impact your credit score. We've got them ranked in importance. They're not equally weighted. The most important one is payment history. And this might be the most boring thing I'm going to tell you all day. But people ask me all the time, how do I improve my credit score? And I tell them to borrow money, pay it back on time. Is that boring? It's boring, but it's the truth. If you have a car payment right now, and you go 30 days late on it, it does not matter what else is going on with your credit world, your score is going to tank. Late payments within the most recent 5 months are going to drag down your score. Anything older than about 2 years, as long as I've been on time since then, is having very little impact. So the credit scoring model is like, what have you done for me lately? All right? The second most important, that's 35% of our score. The second most important thing is account usage, which takes up 2 parts, debt and available credit, like we just added on the question. So remember earlier I split the group in installment debt and revolving debt? Let's go back to that in our mind. So installment debt, car loans, mortgages, student loans, personal loans. The fact that I'm chipping away at that debt each month and the balance is going down, slowly but surely is helping my credit score. The revolving credit is the second piece. So on my credit cards, am I maxed out? Do I have available credit? So one of the things I would share with you, and you may have heard the 20% rule or the 30% rule. You know, don't charge up more than 30% of your available credit. There's nothing magical about that. I had a guy call me last week and say, well, I'm getting to 30% every month. Isn't that good? No. That's not the right information. That's hearing something and going, oh yeah, 30% is good. It doesn't mean you have to go up to 30%. The lower the better. 30%, 20%, and 50% are where the biggest breaks are on the credit score. So having a lot of available credit on those or paying them down or using them very sparingly will help you. Okay? Those 2 things make up 65% of your score. That's the bulk of it. The next 3 things are important. They're just not as important. So length of credit history. I don't love this one because we can't do a lot about it at any particular time. Other than when we're in the market for a new car, for buying a house, for a credit card, shop around and keep doing business with that company for a long period of time. Avoid balance transfers. They're going to shorten our average length of credit history. Avoid finance companies. If you have too many consumer finance companies, the credit scoring model is not going to like that, and your score is going to take a hit. Credit mix, we said installment and revolving, that's going to make up about 10% of our score, and then new credit, when we were talking about inquiries going to the department store today, that could conceivably make up 10% of our credit score. So this is what goes into your credit score. I want you to keep this in your head because we're about to do an activity. We're going to help out our friend Alexis in a second. Any questions about this before we help out Alexis? All right, I realize in your packet Alexis is going to look like gibberish, but it'll make sense when I read it. All right, so would anybody volunteer to read this stuff on the left? I know it's small, but I could use another set of eyes if anybody's willing. You can read it off the paper. Would you be willing to read it? All right, I'm going to open up the whole left-hand side, and if you're willing to, start at Alexis and finish with buying a new car. You know what, just do the first paragraph, and then we'll have somebody else help out. Go for it. You got to scream.
Alexis uses her car for getting to and from work as well as community college. She purchased her current car 7 years ago using cash.
Perfect. Anybody want to pick up from there, willing to read? All right, yes, ma'am.
She feels like she needs a new car. She wants a vehicle that is reliable and does not have to be repaired on a regular basis.
Perfect. Right.
She buys a perfect car, but the dealer is offering her an expensive loan. She would have to pay 14% interest for 72 months or 6 years. She is shocked. She learns that her credit score are lower than she thought.
Excellent. Thank you. One more person.
Unless I decide to look at a little more, I'm pretty sure
Thank you. Excellent. Thank you all. Everybody understand the situation? We know what's going on with Alexis? Pretty normal situation. So what we're going to do now is play a game called Help, Hurt, or Neither. So what I'm going to do is show you something that either happens to Alexis or that Alexis does. And y'all are either going to say help, which you can even just give me a thumbs up, probably easy. That means her credit score goes up because of this. Thumbs down means what happens to her credit score? Goes down, right? And then neither, however you want to show that, whatever, it's going to be neither high or low, right? Anybody have a good symbol for neither? All right, that's good, thank you. All right, raise another way. Perfect. All right, so, everybody understand what we're doing? Three people are nodding their head. All right, let's go with it. All right, so, Alexis got some overtime at work. She used the extra money to pay down a credit card that was close to her limit. Help her credit score, hurt her credit score, or this one, right? Okay, I'm seeing neither. I'm seeing a lot of ups, helps. Okay, if you said help, you are correct because she now has more available credit, right? Good, let's go to the next one. All right, so what about this one? While buying groceries at a big box store, she was offered a chance to fill out an application for the store's credit card. She does it to get the discount, to get 20% off. Help, hurt, or neither. You were so nice. Everything she's like, hey, that's not even don't, she's fine. I'm getting a lot of thumbs down. Okay, if you said thumbs down, that's right. And the reason for that, I'm not taking on yet, is she is applying for new credit, and that inquiry is going to lower her score. Okay. How about this one? She co-signed, right? This is back to your co-sign question, for her friend's automobile. The friend is 60 days late with the payment. Help, hurt, or neither. Hurt, I'm saying universal hurt. Yeah, that's it. Y'all, you're on the hook, just like the other person. Alexis received a pre-screened offer for a credit card in the mail. Help, hurt, or neither. All right. Yes, that is neither. I'm seeing universal neither. Now, if she applies for it, we know that's going to hurt, but she needs to go to optoutprescreen.com, right? If we got one more, now she's ready to car shop. She goes car shopping over 3 weeks, resulting in several lenders looking at her credit. Help, hurt, or neither. All right, I see some people are more tentative about this hurt, but you're right, y'all, it does hurt. Now, I want to point something out. So if this was a 2-week period, they do not penalize us for comparative shopping for like items. So what do I mean by that? Let's go back to our good student. So our good student was shopping for a car, and she had narrowed down to the car she wanted. She knew exactly the make, model, year, everything about it. And so now it's time for her to shop for the loan. So she talked to the dealer, and they pulled her score. The next day, she called her bank and got a quote for the loan, and then she called her credit union and got a third quote. If she does that within 2 weeks, that's only one hard inquiry. For a mortgage, they give us 30 days to do it. That does not mean I can go to Belt one day and Target the next day and Home Depot the next, and it only counts as one. Those are going to be 3 separate inquiries. Everybody got that? Good student, did you have a question, or did that get it? You got it? Okay, cool. All right, so the last question I've got for the group is, which will help you rebuild your credit the most? Is it paying off an old collection account, carrying a balance on a credit card, disputing negative information, or paying the car payment on time? Raise your hand if you think it's A, paying off an old collection account. Raise your hand if you think it's B, carrying a balance on your credit card. Raise your hand if you think it's C, disputing negative information on your account. That'll make me nervous. How about D? Paying a card. All right, you got it. Oh man, y'all made me really nervous, but everybody knew the right answer. That's awesome. Again, it's not the most exciting thing to say, but paying your car payment on time will help you more. Remember, payment history is number one. Let me just point out before we move off of this, is you no longer have to carry a balance on your credit card. They used to say do that and it'll boost your score. Not the case anymore. They reward us for paying it off in full. All right, so I want you to write down or circle in your packet the goal. What goal could strong credit help you reach? So we talked a lot about we gained hopefully a lot of knowledge today, but I want you to focus now on you. Now's the time to be selfish. Is it buying a house, buying a car, starting a business, or something else? You write down or circle in your packet which one of those or something else with healthy credit or strong credit help you reach. What financial goal is most important to you right now? Give everybody a second to think about that, and then do it, and then share a few of them. You can either circle it in your packet, you can write it down. Does anybody want to share? Anybody want to be brave and share one of the ones that they circled or wrote down?
Owning a house.
Owning a house. Good. Of course, said that. Speaking it into existence. Good. What else? Anybody else want to share? I'll put you on the spot. You want to do another one? Okay. All right, so we're going to leave here today with thinking about what is my current relationship with credit. This is important for what do we do next. And what I mean by that is we got to know where do we stand. Right now you're in a relationship with credit whether you want to be in it or not. And if you have open, active lines of credit, you just have to manage what you have. That means on-time payments, get those credit card debts paid down and paid off and have available credit. Keep the same creditors for a long period of time and say no at the department store. So this is what I do if I have open, active lines of credit today. 20% of us have no credit, have what's called a thin credit profile or credit invisible. So this is back to how do we get started with credit. This is pretty common with young people. Now, the most common way young people get started with credit in today's world is what? It used to be credit cards. I would like that. I want everybody to consider that. Student loans. Student loans now are how most students or young people get started with credit. So what do we want you to do? Well, you just described getting a secured loan from your bank or credit union. You read my mind. So what you would want to do in the perfect world is do a little homework, go to like nerdwallet.com, bankrate.com, go to your bank, go to your credit union, and ask them about credit building loans. And get a secured installment loan where you put up your own money and then over a year period you repay your own money. Very low risk to the bank, but it's a year of on-time payments. Payment history is number one, right? At the same time, you get a secured credit card, so you've got that revolving account, and then you put one tank of gas every month on it and pay it off in full when the bill comes, and do it again and again and again for a year. That's how you build credit from scratch. So that's the second. I either need to manage credit, build credit, or rebuild credit. Guess what? If I got to rebuild credit, I've got to do exactly what I just told the build credit folks to do. I also need to pay off those old debts, starting with the most recent and working backwards. Many people will start with, well, I'm just going to pay off the old debts. Well, that's fine, but now I'm going to go from needing to rebuild credit to needing to build credit. So in the perfect world, we're doing those things at the same time. Yes, sir? Graduated? Yeah, so credit is a great question. Credit building loans are really designed for a year. You want to have a year of the usage that I just described, so your credit is built up to a place where you can graduate it or convert it to an unsecured card. I mean, the whole purpose of these loans is to get you started or built up, and then when you're built up, you don't need to go back to them. That's a good question. All right, so write down or circle on your piece of paper. Again, we're personalizing it. We're making it all about us. What's your next step? Is it making sure you're paying all your bills on time? Is it paying off an old collection account? Is it opening a new line of credit? Or is it paying down my credit balances? So circle or write down what's your next step, you personally, that's going to help you with healthy credit. Give everybody a second to do that. And who will be brave and share maybe their next step? What are they doing when they leave here? Pay your bills on time. Yay. What else? Were you going to say the same thing? Pay off the collection. Good. Remember to start with the most recent and work backwards if you've got that. Anybody else? All right. So what I want you to do is write this somewhere or put it somewhere. Whatever your to-do is, put it in your cell phone. Put it on if you're old school and have a calendar, write it on there. You can put it on a lock screen on your phone. If you just circle it, take a picture of it. Put it somewhere. Make a commitment to do it. Set a reminder for yourself. It's somebody that took a little piece of paper and wrapped it around their debit card. Great way to remind yourself to keep doing what you're doing. All right. Any other questions as we wrap up? Yes, ma'am. Say that, they use it as a what? Yeah, so the question is about finance companies, right? How does that work? And you've got to be really careful with those because they promote themselves as a way to build your credit. But remember what I said, if you have too many of those, it's going to actually negatively affect you. So the best thing you can do is pay those on time, pay them off, and then go to your bank or credit union or shop around for a credit card. Oh, okay. I want to know the difference in a reference and cosign. You got to make sure you're not anywhere here on that line. Yeah. If you're a cosigner, you don't want to do that. I don't want anybody calling me about somebody else's debt or yeah. Be real careful about that. Yes, ma'am. By the way, my favorite way to start is I heard that. That's like always gold. Yes, ma'am, please.
But this was on the news on one of those issues.
Okay.
Just in the last couple of days.
Okay.
This holiday season.
Yep.
Stores were going to allow people to I can't remember the name of it, but it's like a layaway.
Okay.
You can take your item with you.
Yeah. Yep.
And pay on those items.
You bet.
So they didn't say how they were going to do that.
Yeah.
Are they doing credit?
Oh, that's a great question, right? So everybody familiar with that? I didn't see that news story, but thank you for sharing. So she said that she saw on the news that they were going to allow layaway again. Now, layaway traditionally has been no credit involved. They haven't done a credit pull. They haven't charged you interest. They haven't charged you any fees. If that's the case, I'm fine with it. But be very careful, and that's going to be up to each individual store how they do that. Right? Do I want to, are they going to charge me any fees? Are they going to charge me interest? Is there a restocking fee if I don't finish it?
No, this is different.
Okay.
Instead, layaway, normally you do get your item,
Yep.
but you don't get the item until you pay out your layaway.
Yep.
Now they're going to allow you to take the item
Yep.
and pay later.
Okay.
I think I heard that on the news, but I think what I understood it to be was they were going to allow you to start paying but not take the item. So it was instead they were going to stop layaway plans where you can go in advance, pick out the items like as if you were going to put them on layaway, but you don't take them, but you start paying towards it.
No, these you take.
We were letting, so I would be this is one of those, have y'all ever heard read the fine print? I would read the fine print on that, because if they're letting me take something with only making, let's say, a fifth of the payment on it, what happens? What if I don't pay, right? And I'm guessing there is going to be some type of credit inquiry there.
It sounds like a problem.
Yeah, I would say if it sounds too good to be true. Y'all's mom didn't say that? Say it again. Yeah, if it sounds too good to be true, it probably is. So be real careful. Proceed with caution. Good. Thank you everybody for coming. My number's on your pen. If y'all have questions, we'll do a free session with you if you need it. And your last homework assignment is a fun one. In between next class, go to debtmonsters.org, take a 5-question quiz, and figure out what kind of debt monster you have, whether it's red, yellow, or green. And we're done. Thanks everybody. Thank you.